Later today, the SEC is hosting a roundtable discussion on market structure. Among the executives invited is the head of a so-called dark pool, Seth Merrin of Liquidnet. Dark pools are off-exchange trading platforms that allow investors to buy and sell large blocks of shares anonymously. Seth is with us right here in the newsroom before he gets on the train to D.C. Seth, thanks for coming in to talk to us. What is the one or two key points that you want to communicate today in the meeting with the SEC Chairperson Mary Shapiro and some of your peers?
Well, the SEC has been very forward-thinking about understanding that institutions manage money on behalf of all the little people. So there are 100 million Americans that invest with these institutions. Trading has gone electronic. Most institutional trading is now electronic. And you cannot take away the tools that they need to mask their intent, because there are lots of different types of investors and traders in the market today, and they need these electronic tools, specifically like Liquidnet.
Now, Seth, it's essentially a matching system, for lack of a better term. Some of the critics of dark pools, not necessarily your company, but of the idea of dark pools, say, look, there's not enough transparency and that sometimes there's not enough liquidity. And what I want to know is, after the flash crash on May 6th, everybody is asking a lot of questions. What do you think the SEC wants to know about the absence of so-called market makers?
Well, look, there's been a fundamental shift in the market structure over the last 5 years, so that now the majority of the volume in the markets are being done by high-frequency trading. And what that means is that the equity markets in this country have shifted from an investor's market to more of a speculator's market, which requires the need for institutional electronic trading like Liquidnet even more so. The catalyst for high-frequency trading is really supply-demand imbalances. And the institutional orders are so large that every time they go into the market, they create that supply-demand imbalance. So systems like Liquidnet really save the investors a tremendous amount of money. We've been rated as best execution across just about every category for the last few years.
I mean, you have about 600 members, is that right, that are institutions that represent about 70% of the equity holdings in pension funds, for example.
In the United States, that's correct.
Let's talk about some words that we've heard from the CEO of the New York Stock Exchange, the CEO of the NASDAQ. Again, not criticizing your business per se, but indirectly saying that the market has become too fragmented. In other words, if I'm an institutional investor, I can execute with you. There's about 50 places I can go. And you had Niederhauer, also Greifeld, saying, look, the market has become too fragmented. What is your take on that?
You cannot roll back progress. There's never been a monopoly that has been good for the end consumer. So yes, there is fragmentation, but that means competition in most other industries. And competition has brought smaller spreads, it's brought greater volume, it's brought lower transaction costs.
But doesn't that make May 6th more likely again then?
We have to learn from our mistakes, not go backwards. I mean, if we always pulled our heads in or put it into the sand after every kind of mistake that has happened, we would never make progress. The United States is at the forefront of electronic trading. But we're the ones that are going to make the mistakes.
Should the SEC then pick which dark pools stay in? Should the SEC have a stronger hand? In other words, because you're more or less saying fragmentation is a problem, so what should be done about it?
Well, the SEC has basically said, look, not all dark pools are created equal. So there are internalization engines that the large brokerage firms basically have, and they've said that you have not proven that you provide any benefit or much benefit above and beyond what's found on the exchanges. When you have 40 of those, then perhaps there's a problem, and they want to move more of that volume back onto the exchanges.
Mary Shapiro almost gave your company sacred cow status in saying that you are a block execution. You are doing you're in a block pool, which is different than a regular dark pool, but still the issue of transparency comes up. How are you going to talk about that today?
Well, one venue is not going to be able to meet every constituent's needs. So the institutions need anonymity. Anytime their intent is transmitted into the marketplace takes advantage of that. And again, those institutions manage money on behalf of 100 million different Americans. So they need tools to mask their intent, and that's what Liquidnet provides.
Seth, we thank you very much. Seth Merrin, founder and CEO of Liquidnet.